For thousands of years, it's been the ultimate symbol of wealth, power, and even divinity. But let's be honest, in an age of digital currencies and super complex financial markets, does this ancient yellow metal still matter? Well, in this explainer, we're going to dig in and uncover why gold remains a powerful cornerstone of the global economy.
Let's just start with one number that puts everything into perspective. 200,000. That's roughly how many metric tons of gold humanity has managed to mine throughout our entire history.
But what does that number even look like? It's hard to wrap your head around, right? So picture this. Imagine we took every single ounce ever pulled from the earth, melted it all down into one giant cube. It would barely fill a single Olympic-sized swimming pool. That's it. This incredible mind-bending scarcity is the absolute foundation of its value. It's finite in a way that almost nothing else is.
So, out of all the elements on the periodic table, how did we land on gold? Why this one metal? The answer really starts with its unique physical properties.
First off, it's pretty much indestructible. Gold doesn't rust, it doesn't tarnish, which means the very same atoms from an ancient Roman coin could literally be inside your smartphone today. It's also incredibly easy to work with. You can shape it, you can divide it into tiny coins, and it never loses its core value. And its density is key. You can hold a fortune right in the palm of your hand. You put all that together, and you've got the ideal, permanent store of wealth.
But its scarcity is also remarkably predictable. The global supply only grows by about 1 to 2% each year from new mining. Now compare that to national currencies, which governments can essentially create out of thin air with a few keystrokes. This slow, steady growth is exactly why gold has held on to its purchasing power for millennia. It's a powerful defense against inflation.
And look, this role as money isn't some new idea. It's a story that's been unfolding for over 5,000 years. Let's just quickly trace the key moments in its evolution from a simple trading coin to the anchor of the entire global financial system.
Things really got started around 564 BC, when the ancient Lydians created the first standardized gold coins. And just like that, trade was revolutionized. For centuries, gold was the ultimate money. Now let's fast forward a couple thousand years to 1944. After two devastating world wars, global leaders met at Bretton Woods and made gold the official anchor of the entire global economy, pegging the US dollar to gold at $35 an ounce. But that all changed in 1971. The Nixon shock completely severed that link, ending the dollar's convertibility and launching the era of fiat currencies. That is, money backed only by government's promise.
Which of course raises a huge question. If our money isn't officially backed by gold anymore, why in the world do governments and central banks keep holding and even buying massive piles of it?
Well, the answer is that even without that formal gold standard, the metal serves an absolutely critical strategic purpose for nations. It's the ultimate financial safety net.
Here's the fundamental shift in a nutshell. Before 1971, a US dollar was basically a claim check for a specific amount of physical gold held in a vault. After 1971, that same dollar became a claim based purely on faith and trust in the stability of the US government.
You can think of gold as a country's financial fire extinguisher. It's what's known as a non-counterparty asset. Now, that's a fancy way of saying its value doesn't depend on someone else's promise to pay you back. It can't default like a bond can, and in today's tense world, it can't be frozen by foreign powers the way a bank account can. It is the ultimate crisis asset.
And you can see this playing out right here in the global demand for gold. While jewelry makes up about half the market, and that provides a really strong cultural price floor, notice that 15% slice. That's central banks. Their strategic buying has become an increasingly powerful force in the gold market today.
So that's the big picture view for countries. But what about for individuals and investors like you and me? Well, it turns out gold plays a very similar role. It's a hedge against crisis and a great tool for diversification.
For investors, one key number to know is 0.25. That represents the approximate recent correlation between gold and U.S. stocks. A low number like this is fantastic. It means gold often zigs when the stock market zags. This provides a really valuable stabilizing effect in a portfolio, especially when things get choppy.
But recently, something really weird happened that seemed to break all the traditional economic models. Between 2023 and 2024, gold and the US dollar, two assets that are normally supposed to move in opposite directions, both surged to new highs at the exact same time.
Now, this anomaly is a really big deal. Typically, high interest rates and a strong dollar are major headwinds for gold. The fact that all three rose together suggests investors were hedging against some deeper fears.
Maybe persistent inflation that central banks can't control, or maybe the risk of a major systemic event. It triggered a flight to safety in both assets at once. Of course, gold isn't the only store of value in town anymore. So how does this ancient metal stack up against its modern competitors, especially in the digital age?
When you compare it to Bitcoin, often called digital gold, their investment profiles are just worlds apart. Gold is the stable, time-tested crisis hedge with relatively low volatility. Bitcoin, on the other hand, behaves much more like a high-risk, high-reward tech stock. It offers amazing digital portability, but it comes with some extreme, stomach-churning price swings.
And what about real estate? Well, real estate can generate income for you through rent, which gold can't. But gold is universally liquid and portable. I mean, you can't exactly carry your apartment building in a briefcase. Gold offers a hedge against systemic risk, while real estate is completely tied to local markets.
But the story of gold isn't all shiny. The process of mining it comes with some really serious environmental and ethical baggage, from the use of toxic chemicals like cyanide to the funding of armed conflicts through so-called conflict gold.
This all raises a fascinating question about the future of the market. As investors focus more and more on ethical sourcing, could we see a split? A world where certified conflict-free or recycled gold actually commands a premium price over newly mined gold with an unknown origin? That's becoming a real possibility. So, this brings us all the way back to our central question. In a world of digital money and growing uncertainty, is gold a vital modern hedge, or is it just an ancient relic? Well, while digital rivals are definitely emerging, the continued demand from central banks and savvy investors suggests that for now, this ancient metal's power is far from tarnished.